Webinar. Hello, everyone, and welcome along to this live webinar. And today we're speaking about the budget. Budget was released yesterday, and for that we have special guest John Howard, very experienced property developer, investor, a mentor, writer, author, many things. So I'm so happy to be with you today here, John.
Thank you very much for inviting me. It's always good to comment on these sorts of things and work with you again. So I'm delighted. Thank you.
Likewise. So, John, perhaps just for people that to get to know with you if they don't, if you can introduce yourself in a few
Yeah,
sentences.
certainly. John Howard. I've been a property developer and investor for 4 years. Keeps going up every year. And I bought and sold over 4,500 properties. I'm currently very active. I've got about 10 projects on the go at the moment, as well as investments, commercial and residential. I also own a few estate agencies, so we're at the coalface to all what's happening in the property market, really. And I'm, like you said, I do some mentorships with people, some high net worth individuals, as well as a few masterclasses a year as well.
Yeah, and also you wrote some books.
Yeah, I've written 5 books, and they're all available on Amazon. But if you buy them through my website, I get more money out of it because Amazon takes 65%. Very sad. Very sad.
Yeah, so we can share the links. I think
Thank you.
that. All right. So I see Simon, like the names. Yeah, it's like our team, like all the team got my name. It's like I think it's a bug of Zoom. Just to remind, if you watch it on YouTube, feel free to subscribe to our channel, the Lendlord channel. We upload videos on a regular basis. You can find great webinars and content about our platform. So I prepared the deck. Let me share it. 1 second. And John, basically the way we do it, I will briefly introduce Lendlord recently, just with the recent changes.
Yeah, absolutely.
Then I will start to break down the budget.
Yep.
I basically prepared deck with some slides about mainly about tax. I think that I think the things that are missing, they're also very interesting to hear your thoughts. And then really interesting for us to hear like what strategies you think
Yeah.
landlords and property investors should adopt now. Then we'll have a session for questions and answers.
Yeah.
So if you have questions, feel free to put them on the chat. If it's relevant, we'll answer as we go. But if not, we will have time in the end. So let me share quickly the screen. Yeah. Can you see the screen?
I can.
All right. Okay. So just quick about Lendlord. Lendlord is a one-stop shop for property investors, online platform/software where you can first manage your existing portfolio, which is critical these days to keep all your data in one place, manage your cash flow, due date tracking, tenants and tenancies, performance insights, and more. The invest section, this is the part where you can find properties to buy, analyze the potential return, and also obtain market data. And the finance layer, this is the place to find finance options to finance your buy-to-let properties, if it's a new acquisition or a refinance, remortgage, but also to get terms for bridging finance if you start a refurbishment project or you implement strategies such as buy-to-sell, flip, or BRR. We are running a promotion Black Friday. So now you can get Lendlord Premium with 60% off. It's a limited time offer. And also on bridging, we now have an offer for free valuation if you apply for bridging through the platform. So log into your Lendlord account to get the discounts and the benefits. Now, John, let's speak about before about the budget. But I think
Yeah.
what is interesting for me is that because before the budget, people spoke about, national insurance, VAT being reducted to 30K, many things that people think that are going to happen, but eventually we speak about few items, like we will go over that, the property income and the mansion tax you spoke about.
Yeah.
But the question if it's like, let's speak first in general, if you think that what is the impact? Because for me, it sounds okay. So there are not lots of changes, but also not
Mm.
lots of benefits. So it's like kind of a mix. Like perhaps people thought that it will be even like really worst, but perhaps it's not so bad for property investors, or we should look at it
I,
in a different way.
well, I think the devil is always in the detail. That's the first thing. The devil is in the detail, and we probably haven't got all the detail yet analysed. That's the first thing, of course. I mean, 1.7 million people are going to be in the higher tax bracket, and that's going to bring into the treasury £8 billion a year. So there's a lot of people who I mean, I had breakfast today with a great friend of mine. She's in her 80s. She's a wonderful lady, and with all her bits and bobs, she earns with pension. She's now living in a higher bracket, which is crazy for a lot of retired people. So this is
Basically,
a
just
this
just
is
to
a
put
this
the
is a
numbers, John, this is like basic, you speak about
yeah,
this layer of
yeah.
property income, which will increase to 47%.
Yes. So what's really important with this is that I'm assuming is for people who own the property in their own name.
Right.
So
Yeah.
if it's in a company, that's totally different. So the buy-to-let investors that own the property in their own name, and if they're earning over £25,000 from property from rentals, that's where they're going to be paying another 2% tax from what we understand at the moment. And that's considerable. We're bearing in mind we've had the Renters Reform Act and all the rest of it, which was brought in initially in a draft form by the Conservative government, and then rubber stamped by the Labour government. And of course, Reform are the only party that are going to get rid of it, which is good news. And there's 2.4 million landlords in the UK supporting 9 million tenants. They're all going to vote Reform, presumably at the next election. And that may not be quite so far away. If you listen to Nigel Farage, he thinks there could be election in 2027, which is very interesting because a lot of the other reforms, like the mansion tax and so on, don't come in until 2027, 2028, and 2029. So you do have to wonder whether any of these proposals will actually come into force on the basis that if there is an election looming, the last thing this Labour government want to do is bring in these reforms because they'll get even less votes at the election. They're hoping that they will have enough growth in the economy that they can cancel some of these policies, no doubt. But with growth expectations at 1.4%, I can't see that happening. And Keir Starmer and Rachel Reeves, I was talking to at dinner actually, a Conservative MP only last week, and the prediction is from most people in the political world is that they'll both be gone after the May elections. They'll both be gone. The worry is for everyone. The people that replace them might be more left wing and more anti landlords and more anti people owning more than one property and all the rest of it than these two.
Yes.
And at the end of the day, it's a split party. It's a welfare party at the moment on the basis of all this money being raised. A lot of it is going to people to support people who do not work. And that is a major, major problem for when a political party, when the prime minister has got a 100-seat majority, but cannot get through any cuts in welfare because the backbenchers won't let him. That is a major problem for any prime minister, a huge problem for a prime minister.
Yeah, definitely. John, so if we now break down like basically each point, okay? I want
Yeah,
to start with the property income.
yeah,
Let's say that it's basically being applied, and
yeah.
now we speak about the changes should be just in 2027 tax year, yeah?
Yes,
Right.
yeah.
And this is for, as you mentioned, for individuals. We'll speak about limited companies.
Yes, I'm pretty sure. I'm almost confident, very confident. This is just for individuals. But at the end of the day, a lot of people have had the opportunity to swap these properties into a limited company, and some haven't done so. So to be honest with you, they could have avoided a lot of this. Section 21 and all the rest of it all could have been avoided if they started off in a professional manner and put these properties in a limited company. I've been, from the age of 18, everything I've ever done has been in a limited company. And actually, they needed to get the right advice in the first place. And that's where, the right advice and education, proper education, that is professional, is so important. And if they can still put it into a limited company, they need to get on and do it, I would suggest.
Yeah, perhaps we can run a quick poll. If you write on the chat one, if you use,
Yeah.
like if you invest in property through limited companies,
Yes.
you do it individual. Let's
Yeah.
see on the
What
chat.
the ratio is. Yeah.
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 Okay, we have both one. Okay, so we have many limited companies, it looks like.
Good. I'm pleased to hear it.
Yeah.
Pleased to hear it.
Some still have like some kind of a mix.
Yes. Yeah.
Okay,
Yeah.
so in terms of the property income, so we speak about 2% increase on rental income, I
Yeah.
believe, from property.
Yes.
It will come to an effect in 2027 and then 2028. Okay. There is also the savings income, so like not related specifically for property, but this is also going to be increased by
Yeah.
2% starting 2027. You have something to say about savings income, like if like the impact for that?
Well, the problem is this government aren't encouraging anyone to save money, are they? Which is very disappointing, really disappointing. And of course, the people leaving the country, according to them, they're all billionaires, but that's just not true. There's a lot of very young people. There's a lot of young people, very ambitious young people, bright young people we need in this country, and they are leaving, as well as people who are worth a few million. They're not necessarily multi-millionaires, but they might spend 50 to 100,000 a year in the UK on different things and employ people. They're leaving as well. So this is very serious for the government. 250,000 people left the country last year.
Yes.
And that's a lot of tax they're losing, and it's a big problem to the government. Big problem.
Yeah, this is something that basically they need to think about, like the tax that you are losing when people are
Yeah,
yeah.
absolutely. And it's not just that, but the people that are leaving are clearly ambitious, go ahead people who want to get on and do things, and they're the ones you need in the country, the entrepreneurs. Everyone listening to this call, the webinar today, is probably an entrepreneur. We might take risks, and the risk. I accept that the appetite for risk is different for everyone, but certainly, everyone listening today is captains of their own ship, really, and they're driving things forward, and that's what this country needs. It's okay having massive companies providing, a lot of jobs for people, but small businesses still employ more people than the big companies do, and it's so important. And this government are driving those people away.
Yes, definitely. And then tell me about the savings income increase in the tax. Should it perhaps encourage people to get the money out of saving and perhaps invest in?
Well, there is that, but of course, against that at the moment, if you can get, the great thing about buy-to-lets over the years and investing in properties, that over the last 20, 25 years, on average, it had gone up 5% a year, capital appreciation. That hasn't happened in the last few years. So, the appetite for buy-to-lets and being knocked dramatically by not just the Labour government, but the Conservative government as well, with Section 24, Section 21 and all the rest of it, Renters Act and everything. A lot of people have lost the appetite for investing and property. Now, in one way, that's very negative, of course, but in another way, that the people who are still battling away, people like me and others on the webinar, of course, that gives you a more opportunity, because you're probably going to be paying less for the properties. There's more opportunities, and hopefully you can get you can stretch that return you're getting on an annual basis than what you were getting. And at some point, with property, and I've been in it 44 years or whatever, survived three or four recessions, things come full circle, and we will have property inflation again. Rents are still going up, and actually, with what this government has done now for private landlords, it's only going to put up rents more. And at the end of the day, the big losers are always the tenants in the end, always the tenants. Yeah.
And what about the renters? We come back to the tax items,
Yeah.
but you spoke about tenants.
Yeah.
The Renters' Right Act basically was introduced, I think, approved by the Queen in October.
Yes.
By the way, Landlord implemented some changes on the tenancy agreements. I will show it in a sec.
Yeah. Interesting. Yeah.
But what is your take on that? Because basically, it's also the intention for that. I don't know if it's like what in favor of tenants or it's basically perhaps also
Well, of course, it's
landlord.
made out to be. It's made out allegedly to be fair for both sides, but of course, life is never fair, is it? So, the one thing that this Labour government wanted to put into it and were persuaded not to was the fact that we, as a landlord who wants to sell, allegedly you can get your property back within 4 months, and that is very, very important, because if that wasn't in there, that would mean that your property would probably drop 30% in value because you could not get vacant possession on it, and vacant possession values are always higher, or should be always higher, than investment value, unless perhaps it's an HMO or something like that. So that's now I was quite excited about that, although I've got a large portfolio across the UK, because I thought, well, that's great, because I'll be buying more property at 30-40% discount to open market value. So for everybody that loses, there's a winner.
Exactly.
So
Yeah,
you've got to be positive. You've got to look at the positives in all this. And when people are running away from the market, which they are tending to at the moment, perhaps it's the time to run towards it.
Yes. Yeah. I think people if you want to find opportunities, I think perhaps.
Yeah, absolutely. No guts, no glory.
Time. Exactly. Yeah. And so another thing that the Renters Act was like, if you want like a cause to evict tenants because of sale.
Yeah.
What is the period? Like I think it was like these, like they say.
Well, I think the period allegedly, but I mean, my experience of getting rid of tenants is like many people on this webinar, that they're advised by the local authority to stay there until they get a court eviction these days, which is dreadful to think that councils are advising people to do that. And of course, the other issue you've got is that if you want to put the rent up, they can appeal to a higher body. God knows who's going to be administrating that, because who the hell's going to do that? But and they've got a number of months where the rent doesn't increase until the higher body has agreed it. If they appeal it, and then after that they've got another 2 months to get used to paying a higher rent. So it's that's probably a bigger blow than anything else, to be honest with you. I think. Yeah.
Let's say you were able to evict the tenant because the cause was that you want to sell the property.
Yes.
And if I'm not mistaken, there is a period that you need to wait until you can.
4 months. 4 months, I think. Yeah.
This is the 4 months. Okay.
It's the 4 months. But in my experience, if the tenant wants to be difficult, we're going back to what we used to do 30 to 40 years ago, which was give the tenant money to go. Because you don't want to be waiting 4 or 6 months to get your house back. If you can get it back in 6 weeks, it's worth giving away 1 month's rent or 2 months' rent in order to get it back quicker. So we're always looking at ways of shortening what is always a long time in property. Nothing happens very quickly in property. Right. So if you can shorten that period by sweetening the pill, if you like, then why not?
Yeah, I agree. Okay, now let's speak about the mansion tax. You mentioned it in the beginning.
Yes.
So here, basically, this is from 2028.
Yes.
And for properties valued above 2 million, there will be additional tax of 2.5K per year.
I thought it's between 2 million and 2.5 and 2 million and 2.5 it would be. Yeah, it's the top 1%. It's from 2 million upwards. So at £2 million you pay less. Yeah. So it's 1%. So I think this is a nonsense tax for most people. It's a nonsense tax
Because
because 82%. The reason I say that is because 82% of the properties are based in London, and I would call it a terrace tax because a £2 million house in London gets you a terrace house, a nice big terrace house. The average first-time buyer in London is spending 485,000 on a first-time buyer house, so it gives you an idea of where we are. And London really hasn't gone up in 10 years. In fact, they're more expensive properties over 2 million have actually gone down the last 10 years. So I never feel too sorry for people with a big mansion in London, even if it's still a terrace house, to be honest with you, Avram, because they're not too badly off. The one thing that the knock-on effect of this, of course, and this is the interesting thing, does it mean that people in those bigger houses in London are going to, and elsewhere, there are some elsewhere, of course, are going to downsize before 2027, 2028 to avoid this tax? Or is it really peanuts to people at that level? And I would suggest, it's not going to be killing anyone paying 2,500 more over 2.5 million, is it? The one thing that disappoints me, and I thought they were going to I thought they would definitely do this, and I predicted it wrongly, and that was change the rateable values on the lower properties, because you've got properties in Blackpool, a 3-bedroom semi in Blackpool, and if you've been to Blackpool, it's not the best, are paying more in rates than some more expensive places in London. And that is madness. Mm-hmm. But then there might be something in the detail we haven't seen yet about that. But that is madness. And I think that should have been changed, So, and they haven't done, which amazes me. I mean, this mansion tax is just a sop to the left of the party. That's all it is to the Labour Party. Yeah. It's nothing more than that. And it's going to bring in £400 million by 2030. Well, 400 million is absolute peanuts in terms of government income. Peanuts. Absolutely. When you think they've wasted 100 million on a back tunnel for the HS2. So put it in perspective, it's absolute peanuts. It's like you and me spending £4.
Yes. Yeah.
That's all it is. It's peanuts.
Now let's speak about the things that also I didn't see any mention about stamp duty. So last year it went up to 5%. Capital gains tax, all of this stuff. I didn't see any.
No, I totally agree. So that I think we need to almost talk about the things they haven't done rather than things about they have done. I mean, one other thing they have done, and a lot of people, I buy a lot of commercial property, a lot of empty commercial property. Commercial property's on its knees. There's some wonderful opportunities in commercial property at the moment. And the good news the government have done is that they are going to reduce commercial rates for town centres. And that happens in April. I personally think the way that you collect the rates should be based on turnover, and it should be collected with the VAT. It would be very simple to do. The Conservative government kicked this can down the road for 14 years on rates. It's very, very old-fashioned the way it's done and valued. And to be fair to this government, they are trying to do something about it. But this government are not radical enough. If you want to, change town centres, at the moment, 90% of the rates collected by local authorities has to go back to central government. It's not kept by the local authority. So they can't give any rate-free period on these shops at the moment or anything else. And that is a terrible shame. Now, going on to the first-time buyers, there was talk they were going to lift the first-time buyer stamp duty to 500,000, and that would have been a great help to the London first-time buyer market. And of course, you get the London first-time buyer market going, then the rest starts to happen because it's a knock-on effect. And they were talking about putting it up to 500,000, no stamp duty. They haven't done that. So that's a big blow to the London property market, especially, I think, because it needs help. The London market needs help. And of course, people sell in London, they then buy in Essex, Wiltshire, all over the country. So it really has a knock-on effect across the whole of the UK. Whatever happens in London tends to ripple out. There's a wave effect, if you like, out. And they haven't done anything about that, which is very, very disappointing, really disappointing. And I think it's not what they've done on this budget, it's what they haven't done is what is disappointing. I think what they've done is pretty inevitable. was pretty inevitable. And of course, they make it sound like it was going to be worse. So when you hear about it, it's not quite so bad. That's the old trick these days they use. But certainly, I mean, they've raised in the last two budgets £67 billion. Huge, the most ever. We're taxed the most ever, just about ever, apart from, I think, just after the Second World War. Yeah.
Yes. All right. Okay. So I think now we can go to take some questions. So
Yeah.
if you have questions, either raise your hand or put it on the chat. In the meantime, John, if I may, I want to show just how you can use the new tenancy agreement that should support the Renters' Right Act. So can you see the screen? So this is the Lendlord platform. As you may know, you have the invest part where you can find properties to buy from estate agents, auction houses, and we have the in this section the deal analyzer as well, where you can analyze any deal on different strategies, buy to let, flip or BRR, and you can also stress this for best case scenario, worst case scenario, and see their returns for the long term. The manage section, this is the place to manage your existing portfolio. Get tasks on, let me switch to this account, on renewal of landlord issuers, SCAR certificates, EPC, mortgage update, expiry dates, and more. You can also manage your documents, which is, I think, critical feature. It's a part of the premium plan, which you can get with 60% off during November with the Black Friday promotion. And here, basically, you can keep your portfolio organized with all the documents you need to store, and you can share in one click. And now we also added auto signatures, so you can send tenancy agreements or any contract to people to sign electronically. And this is also part of the premium plan. You can also manage your tenants and tenancies, track the rent collection, and receive maintenance reports when you invite your tenants to their own dashboard. And of course, you can, on the premium plan, you can link your bank accounts and manage your cash flow. And then you can get the interactive report with insights about your portfolio. You can see the top performing properties and the worst performing properties. So what we've changed for the Renters' Right Act is the tenancy agreement generation. So you can maintain on landlord prospect tenants. And then if you want to generate an agreement for those tenants, now you have two options. So you have the legacy agreement, which is available, but also you can switch to the assured tenancy agreement, which should be compatible with the Renters' Right Act. And then basically just select the tenant you want to generate the agreement to, fill in the details, and generate the document. The good thing with Lendlord that you can customize the agreement by clicking on manage section. So you can change the texts, you can save them for the next time. You can remove sections, you can play with the order of the sections, and you can add new sections as well as you want and keep them for the next one as well to not disappear after you generate this specific agreement. So this is now available, and you can also send the document for auto signature, which is great. You don't need to upload to DocuSign. You can just click on send for signature, put the emails of the landlord and the tenant, click next, and then you will be able to place the signatures and send it to your tenant. So it's now available on Lendlord. It's part of the premium plan. So use the coupon code for the Black Friday to get it with a very affordable price. Now let's take some questions. All right. All right, I will take some questions from the chat. And again, if you want, you can raise your hand and ask the question. So the first question, if a company, John, if a company owns the freehold of a block of flats which
Yes.
are rented, does the mansion tax apply? Good question. Okay.
That's a really good question. I think the mansion tax is for people's personal homes. I don't think it affects properties in a commercial, in a limited company. That's how I understand it. But again, like all these things, the devil's in the detail. And, there's lots of things that weren't mentioned in the budget that are probably coming out. They don't mention everything. When she speaks for an hour. She doesn't mention everything that's happening. So you've just got to watch the devil's in the details, I've said. But I think it's on personal houses. I don't think it's on, because it's on rates. It's based on rates, personal rates, not on commercial rates. Yeah.
Okay, Darren asks, hi, John. Making says, and looking great as always, John. You
Oh,
got
thank you very much. Nice to have one fan, isn't it?
thoughts on taking all properties out of personal name and then transferring into a company. What
Yes.
possibilities are there from avoiding stamp duty and CGT? Is here any way it can be done? From Darren, yeah.
Darren, as far as I'm aware, I think there was a amnesty on the stamp duty side of it, but I think the tax was an issue, wasn't it? But from memory, but the answer is to speak to your accountant, like all these things. Speak to an expert, someone you can trust, and a good steady accountant's what you require. And I'm sure someone will recommend you a good one if you haven't got one. I'm sure you got one anyway, but just talk to the accountants to make sure you're doing it correctly.
Yeah, basically because there are so many details that can.
Yeah, absolutely, and also personal
Yeah.
details as well that might change things. Joint names or whatever it might be. So always take advice from a proper professional person, not the guy down the pub.
Definitely. Okay. Another question. Any suggestion on how this budget will affect inflation and the Bank of England base rate and borrowing a mortgage rate over the next few months?
Well, very interesting. Yesterday afternoon, I was talking after the budget, just happened to be at a conversation with Scott Marshall, who's an MD of Roma. And we were discussing a few things, and we're both in the property elevator show that's on Amazon. And I said, "What do you think?" And he said, "Well, I think interest rates might come down 0.25% next month." And I think that's quite a standard. I think a lot of people are thinking that. I don't think this budget's probably changed that very much. Although, the markets, the one thing I would say about this budget, of course, is that the markets have accepted it. The financial markets have accepted it. They're not panicking about it. She's given herself a bit of headroom.
Stable, I think, like since yesterday.
Yeah, well, it was. I don't know what it is this morning, but certainly yesterday he was saying that it's stable. The market's stable, and of course that's the big worry. The big worry is the market, because the market. Where Liz Truss went wrong, she didn't even speak to anyone in the city before she did what she did. But this time round, the market seems to have taken it quite well, which is good, because you want a stable market, you want a stable bond market and everything else. So
if you recall what happened, John, like three years ago, or like
yes,
at least Truss.
Yeah, things went a bit AWOL for 6 months. So my prediction would be 0.25%. I mean, it's pathetic, really, isn't it? But that's what they do these days, and maybe a couple more next year. And I've got some investment stuff that's coming up. I think I'm at 5%, fixed 5% at the moment for 5 years on some of my commercial stuff, and that's coming up next year. And I'm thinking, well, probably the timing won't be bad for that, because I might be back to those sort of levels again, 1.5 over base or something like that. Maybe you might touch a little bit less than that. So so I think interest rates will come down a little bit more. I think inflation, anybody who believes inflation is 3.5%, I think is cuckoo. I think most people think inflation is 10% in England. I mean, every time I go out for dinner, and I'm always paying for some reason, the bill's huge, and of course they've just put the minimum wage up again, and the working the fair working age, the working wage, whatever they call it, again, and I know people with restaurants and pubs and hotels who are saying to me, "John, the last increase is killing us." especially with NI brought down to £5,000. Anything above five, there's NI and everything else on it. So they really haven't helped the hotel industry at all. And the pub industry, I don't think. I mean, they're saying they're going to give some rate relief, which is great. But I mean, there's more to running a hotel and pub than rates. That's for sure. Yeah. Rate relief. Yeah.
A quick note about mortgage rates. You can always go to the finance.
Absolutely. There we go. Look at some of those rates. They're fantastic.
But you need to look at the fees as well.
Yeah. Well, say you're borrowing the money over 3 years. You need to add the fees and divide it by the amount of months, and then you get the true rate. But even so, some of those rates you've got there look great to me. I'm going to be logging on later.
Yeah. It really depends. But this is, I think, for individual. You can search for companies as well.
It's brilliant. Yeah, really good. That's a really, really good thing to have on there. It's great. Yeah, really good.
All right, let's continue. So, next question. Do you have a link to this Zoom? Yeah, we will. This will be available on our YouTube channel, this webinar. Okay, a generic question from Fatima. What's the strategy going forward? I believe, perhaps investment strategies in property. You spoke about it a bit, perhaps. Any thoughts on that, John?
Well, I think developers are having a very, very hard time. So if you're developing property like I am and others, as well as buying investments and so on, because with the developers amongst us all have had a tough time because building costs have gone up 40% over the last 3 or 4 years. You're borrowing from any of these bridging companies, it's basically 1% a month. If you go over the time period, which, I've gone over the time period on 2 of my developments I'm doing at the moment to pay it back. We all have, really, because of different reasons. They try and penalise you very heavily. You can negotiate that down, by the way. Don't accept what they say to start with. And it's very, very tough. And what's happening is people aren't getting their cash back out of it when they refinance or when they sell to go again. There's less cash because it's taken longer. Interest rates have gone up. Everything is more expensive. Everything. So, if you put £500,000 into development and you hope to get, £1 million out of it at the end as a profit, you're £500,000 back plus another £500,000. What's happening is, it hasn't gone as well. You haven't sold them for as much. You've got more interest. You've got more costs, and you may only be getting your £500,000 back or less, which is a real knock-on effect to the next deal. So there's people who also are looking to retain their projects and refinance, aren't managing to refinance at enough money to get their cash out, which means there's great opportunities for other people who are coming into the market now with fresh money and no problems at all, to actually take advantage of a lot of this. Because, for everybody who can't get their cash out to go again, it's one less buyer.
Yes.
And less competition for the rest of us. So what's really important is if you are buying and selling and be it refurbishing and selling, is to always try and keep moving, try and keep some money so you've got the next opportunity. Because even if you haven't done well on the one you've got, remember, you're only as good as your next deal anyway. If you've lost money on the last deal, not done so well, don't worry about it. Learn from it.
Yes.
As long as you've got some dealing money, if you like, to invest again, whether it's to invest long term or short term, you need to keep going if you can, which isn't easy. I know it's not easy. And I think going forward, a lot of people now are looking at, and I'm helping advising on a 68 flat scheme where the gentleman that owns it, who's bought it, is going to refinance the whole lot and keep them all. And that's quite a fashionable way of doing things and looking at long-term income. When things are tough, people tend to buy income. They want income. They want stability. I don't think this is the time to be super brave with developments. This is the time to be a bit steady. And certainly some of the interest rates around for long-term funding, stable, long-term investment funding, as we said earlier, is looking quite attractive now. And that will look even more attractive by the end of next year, I think. Yeah.
Definitely. And also reminding people to use the deal analyzer before you invest because this will
Absolutely. And we spoke about that before, and that deal analyzer is great because it sorts the whole thing out for you. Yep.
exactly.
Really good.
By the way, John, we developed a Chrome extension. So basically, you can go, let me see if I can show it. Basically, any deal that you find, any listing you find on Rightmove,
Yep.
Zoopla, on the market, in one click, you can get all the information into the landlord deal analyzer if
Yep.
you download our Chrome extension. So let me try. So if I reviewing this listing, I click on the Chrome extension. I select the strategy I want to analyze, and then it will take a few seconds. Then with AI, we are extracting, yeah, this is part of the premium plan. So I have an account, like, but basically I will explain. In one click, we will take all the information. If it's a BR strategy or flip, we'll also
Yep.
analyze if there are refurbishment that is required. And you will
Yep.
see the numbers on Landlord instantly.
Wow.
You
How
can
good
see,
is that?
yeah, yeah,
Can it do can it do the painting for me as well?
of course, yeah, with AI, you can do
Decorating.
it with
Yeah.
the
Brilliant. I mean, isn't that fantastic? I mean, that's amazing what,
yeah, and I
and
think
this can save people so much time. I get people send me an analysis of a deal, an appraisal, and they've taken like a day and a half over it, and it's the most beautiful document ever, but the deal doesn't work. So, they've not been being rude, but they've wasted a day and a half when if they did it like this, they would probably do it in what, 10 minutes, would you say? 15 minutes?
yeah, yeah, even
Because sometimes you're only looking for the basics. You're only looking for the basics. And if it looks like it works, then you can go into more detail. You just want to know what are you going to sell it for at the end, start at the end and work backwards. So, what's it worth when it's refurbished or when it's let, what it's going to cost to do. So you can then work out what you should pay for it. And really, all the other bits and bobs can come in later, but it then shows you whether you need to bin it, put it in the bin, or whether you want to analyze it further. And that's where I think people go wrong. They analyze the whole damn thing to the same such a degree with crime figures and everything. It's wonderful. But if it doesn't work, you should know it doesn't work much earlier, so as not to waste so much time. And I never look at a deal, by the way, until I've done all this analyzing. I don't bother looking at it first. I analyze it first, and then if it looks like a good deal, I'll go and see it. I don't rush around looking at, I'll be doing. Otherwise, I'll be looking. I'd do nothing else if I wasn't careful.
yeah,
Yeah.
absolutely. And let's take perhaps like we are like running out of time. Perhaps two last questions.
Yes.
Um, Let me pick one that might be relevant. What will, one second. Will the housing market improve after the budget? Okay.
That's a great question, isn't it? If I had a crystal ball, I think next year, and I do a prediction in January every year, by the way. So if you want to look back on my YouTube and see what I said this year, I think I've got it about right, actually.
Okay.
And I'm speaking at 2 or 3 events between now and Christmas. Of course, that's the one thing everyone wants to know, what's going to happen next year. I think next year interest rates will come down a little bit, which will make life a little bit easier for everyone. I don't think this budget is going to affect too many people, to be honest with you, property wise. I am disappointed it's not supporting first time buyers, because I think the Help to Buy scheme that the last government brought out helped 700,000 people, and it's the first time there's not any real direct help for first time buyers in 50 years. So that just shows you how important it is to house to the house builders, because the house builders, the big ones, build 61% of the house in the UK, and they won't build if they don't have a order book. They stop.
Okay.
So that's a big problem. So I think next year things will improve modestly. If you get a 2 to 3% increase in property values, that's peanuts, and that's average. So I think we're going to bobble along a little bit along the bottom. Interesting, Scotland this year went up 6%. Best performing area in the UK
Oh,
in terms of region, if you like, with Scotland. Yeah.
interesting. All right. Okay. So I think we can wrap it up. Yeah, I think the main thing is just to watch what is happening next, because the budget is then they need to implement the budget. We need to see how it's
Yeah, yeah.
progressing. We have the Renters' Right Act. We have many things going on. So I think we definitely should do another webinar early next year, perhaps, to see where.
I think March would be good, because
Yeah.
I think by then, if you're not in a hurry and you're earning 4 or 5% deposit on your money, you know, I wouldn't be in a hurry. I would just see which way the wind's going to blow early next year, and then I think there'll be opportunities.
But
Because
John, for this point, people will not, perhaps, like, if people wait, the question is they will not lose the like opportunities, because perhaps then you.
Well, what you've got to remember with property is like a big ship. It takes a long time to slow down, or not that long to slow down sometimes, slow down, stop and turn the other way. And it doesn't happen overnight. You know, we're not in a crash situation. We're in a decline, if you like, or we're bobbling along the bottom. And you know what they say, never catch a falling knife. Never catch a falling knife. Wait till it bounces off the floor before you jump in. And I'm guilty over the years of thinking I could beat the market. And you know what? You can never beat the market.
Yeah, definitely. Okay.
Not possible.
Yeah, I agree. You can never beat the market.
There's no mega rush. Unless it's a deal of a lifetime. Of course, that's different. But there's no mega rush. I would just see how next year pans out. As I said, I think there's normally a bit of optimism in the first quarter. Sometimes that optimism continues, and sometimes it doesn't. But I think, I said, there's no rush. If anything needs planning permission, that is taking for ages at the moment. By the way, don't think you're going to get planning in 3 months. Assume it's going to be 6.
Yeah, I agree about the planning permission point. All right.
Dreadful. Yeah.
So thank you very much, John, for your time.
It's a pleasure as always.
Pleasure. And thanks everyone for joining. We will upload the recording to our YouTube channel, so feel free to subscribe and use the promotion for the Black Friday on the premium plans and free valuation on bridging offers. John, hopefully to see you in the next webinar, and good luck.
I'll be delighted. Thank you very much indeed.
Thank you very much. Thanks,
Thank you.
everyone. Have a great day.
Bye-bye.
Bye-bye.